Welcome back to the voice of the private sector and the second hour of Brian Bushlach's Business Briefing.
Well, we touched on real estate off the top of the show with Patrick Stone. It's time now to take a little deeper dive into mortgage financing. The market remains pretty hot, inventory tight in many neighborhoods. So really important to work with somebody you trust. And one of the people we trust is Adrian Webb at RPM Mortgage. I sat down with him at his office in Bellevue this past week. Well, Adrian, the spring housing market season is right around the corner here. Let's start with a market update. Janet Yellen came out and testimony in Congress this past week. And what's that done to the markets?
It actually worked in our favor. She didn't say anything too bond negative, so to speak. It was really consistent, still very quantitative easing-like. Definitely kind of still has some concern with where the labor markets are, doesn't want to raise rates at all on the short-term side with the Federal Reserve, probably through the end of this year. And we'll see they're not making any brash decisions at all. So it's going to be kind of slow and steady as far as what they're saying. And because that statement kind of calmed at least our bond market, which had a bit of a rally yesterday in light of that.
Let's talk about that too, because everybody talks about prime rate and interest rates. Mortgage-backed securities a little bit different there, but still tend to track with other, bonds that are out there. And it's been interesting what's happened with an improving U.S. economy, yet that, I guess, is offset by a global economy that is slowing down. And we see a lot of money coming into the U.S., and that's good for mortgage interest rates.
You're absolutely right. Yeah, I mean, a lot of the stuff that's going on in the Eurozone, and anytime there's instability on the global side, it ends up helping us. You know, there's some concerns with oil and a lot of jobs in Texas and North Dakota and places like that we're actually seeing today. The job initial claims went up, fairly substantially. So anytime we see those kind of instabilities, it pulls money out of the stock market. We compete for the same money quite a bit and improves our bond market, which is what our rates are based off of. And anytime the Fed speaks about their rates, it's all short-term rates and bank lending rates, but it does affect kind of what the media thinks and how people act accordingly.
With Adrian Webb here at RPM Mortgage, and let's talk about that, maybe park on it for a minute, because I think that's a big disconnect between maybe the mainstream media and the public in general, and what really happens. I mean, we hear a lot about raising interest rates, the Fed perhaps going to raise interest rates this fall. It doesn't exactly tie directly to mortgage interest rates, does it?
No, you're absolutely right. And the closest that we got to where the Fed was controlling those long-term rates was when they were buying mortgage-backed securities at the billions per month. And that's when they were truly controlling that mortgage-backed security market just by supply and demand and buying up all the supply, which kept our rates low. We went through all those quantitative easings where they were buying those mortgage-backed securities and have since gone away from that, and obviously our market was stable enough to absorb it globally, but it's something where that was one of the big things that the Fed did do as far as controlling them, but typically they don't have a lot to do with that at all.
And that's good to hear. Those of you just joining us, Adrian Webb with us at RPM Mortgage. And let's talk about your practice in particular. I know that RPM as a company, very client-focused rather than mortgages for so long had been a commodity. And I've always told our listeners, work with someone you trust. This is a big financial decision for so many people. It's one of, if not the biggest financial decision they'll make in their entire life. And, seen so many people over the years go online or make a quick decision based on what I would call rate bait, maybe a low interest rate that maybe they didn't get. And I know that's certainly not the case here at RPM.
No, absolutely not. In fact, it's funny you say that. There's always going to be somebody that's going to claim they'll get you a better rate, but they actually have to deliver it. So you can go on the internet and look for rates and Google interest rates and find the lowest rate out there. At RPM, we are fully transparent and we're going to deliver what we promise. So the biggest thing is if you're just focused on rate, you should probably go somewhere else, because you'll always find somebody that will promise you the lower rate, but whether they can deliver it is the other thing, And I think that our rates are always extremely competitive, and we're always wanting to be the lowest and have the best service. But like I said, if anybody's going to just go out there and promise a rate, that's not us.
And what we need to clarify too is that interest rates are reflected so many different ways, depending on the size of the loan, loan to value, obviously credit score factors in, income. There's a lot of things that go into quoting an interest rate. But in general, that said, let's talk about the 30-year fixed, which is the benchmark in the U.S. Mortgage-backed securities market. In general, where are we at on the 30-year fixed right now?
We're in the high 3s to the low 4s. So we've seen everything from 4% to 3.75. Today we're priced sitting right at 3.875, depending on your scenario. And I expect us to probably be a very solid, 3.75 and potentially dip into the 3.625 on an ideal, 75%, 80% loan to value with great credit, single family residence, those kind of things. But fantastic time, absolutely.
Talk about the jumbo market too while I've got you, because there was a time where there was a big disparity between what we would call conforming or conventional interest rates and jumbo rates for bigger loans on bigger homes. What's the jumbo market doing?
Well, the jumbo market has been, over the last few years, outstanding and just extremely low rates. In fact, lower than conventional at many points because of the bank lending rates. So when a big bank can borrow at such cheap costs, and they can actually lend out and see a return on that much better than they can on the smaller one. So, and the higher you went, almost the lower the rate went. So it's been a interesting time, and we're still kind of in that category where it's still very cheap for banks to get their money. So they're lending at the jumbo side on a very low rate for sure.
Adrian Webb at RPM joining us here on Business Briefing. Let's talk market now overall. We enter the spring season. It's that time of year where more and more people start to think about putting their home on the market. I know inventory's been a concern. Really acute crisis at the beginning of last year. Not so much this year, but still, it's not like there's a ton of homes out there on the market.
That's true, and obviously that's just driving prices up. We do a lot of business here in Washington as well as California. We're seeing it much worse even in the California market where the listing price is at minimal a suggestion, and it gets driven way up above that. We haven't seen that quite yet as much in this market, but anytime supply and demand is supply is low and demand is high, prices are going to go up, and obviously as they can't build them fast enough right now, so we're seeing a bit more inventory come to market, which is helpful. But we definitely want to always put our best foot forward and make sure our clients are making good, strong offers.
It sounds to me, in general, from the agents I've talked to and consumers as well, the mood is positive and things are even better than they were maybe a year ago, but it doesn't seem like anybody's being too irrational about anything. It's like, hey, we're healthy, we're good, market's good, but nobody's getting too crazy.
Right. I mean, that's kind of the good news too, is that we're not seeing the massive appreciation rates. We're seeing everything kind of in the 5 to 6% nationally. And in our market here, we're seeing a little bit more than that. But we don't want the 20% swings. Those are short-lived, and some investors love it, but it's not good for a healthy economy and our healthy housing market. So we prefer kind of the slow and steady once again. But that's kind of what we're pleased to see in this market for sure.
Last question I have for you, for our listeners, the consumers out there, home buyers in the market. What's your advice for them? I know some of these folks are maybe getting back into the market for the first time in 4 or 5 years or maybe more. Last time they bought a home might have been in that run-up between 2003, 4, and 7-ish. And they might maybe have their credit fixed up, or they might have equity, as our friend Pat Stone says. They've been re-equitized in their home, maybe ready to make a move. What's your advice to them? Because the market's changed quite a bit. Yeah,
it absolutely has. So obviously everything's a bit more strict as far as our underwriting guidelines, but it has also brought some lower rates with it and some more security. And when we're making good bets on our loans, we're always going to be able to offer competitive rates and do things really well. So it's probably for the better, the stricter guidelines and whatnot. And there also are some great new programs for people to get back into the market if they have had a short sale or a bankruptcy or one blemish. There's quite a few programs that have come up just even recently that people that think that they might not be able to qualify because of one financial event or another absolutely can, and it's just a matter of them giving us a call so we can kind of let them know what those seasoning requirements are.
Great stuff. Adrian, thanks for joining us.
No problem. Thank you.
Our thanks to Adrian Webb at RPM Mortgage. If you'd like to learn more, find a loan advisor near you in Bellevue, Seattle, Portland, Lake Oswego, Vancouver. Hey, just visit rpm-mtg.com. When we come back, we'll talk more lending, Those of you business owners having a little bit of trouble, stay tuned.